May I have a last, what you call rapid fire question? When do you all expect the first cut? Let me start with you, Abheek. When is the first cut, you think?
I think in February next year.
February. No, only one word. Let's make it rapid fire. Kaushik.
We are sticking with April. But I wanted to give you a little bit of reason you like it if you hear it out. Why April?
No. First cut. Sorry. Rapid fire, Kaushik. One word.
April.
April. All right. Amandeep?
I think I'll go with the current swap markets, February.
February. Mr. Tewari?
I don't want to speculate on governors' rate cuts and all, so I would pass this question. Thank you.
Okay. All right. Maybe I will not toss the other questions to you because they're more economist questions. What's your inflation target now, Abheek?
Average inflation, 4.8% for the year.
4.8, also much lower than the governor. And Kaushik?
5.2. We have maintained it at 5.2, keeping the buffer.
Okay. And any tweaking to your GDP forecast, I mean, after the recent events? Kaushik?
So, Lata, we are at 6%. We haven't changed it after the GDP data for January, March. So, we are holding it at 6%.
Got it. Okay, Abheek, yours?
6 to 6.2%.
Kaushik, your thoughts? Do you think that an expected dovishness is lacking? Just your takeaways.
Lata, I think, it's along expected lines. Whatever we expected happened. I told you earlier that even if they could mathematically reduce inflation to 5%, probably they would be cautious and just do maybe 10 basis points just to keep some buffer. That's exactly what has happened. But, I will contradict a bit with, Abheek, and I think it's actually hawkish on the margin if you read through the, different statements. One, which you pointed out, the governor is now repeatedly saying that don't get complacent about the fact that we have come to 5% and that RBI is more or less happy with 5%. Our target is 4% and we need to go to 4%. That's why he mentioned that we are not going to go below 4% or close to 4% in FY24 at all as far as inflation is concerned. So he is indicating to market that our target is 4% and we have to reach there. And for that, whatever we need to do and, hold on for a longer time, we'll do that. So that's a bit hawkish on the margin. And they're repeating that continuously from now on. The second part is, I think you observed that you mentioned somewhere that core inflation has to come down durably in order to get to that 4%, headline, CPI target, which means that RBI is, also focusing quite hawkishly on core inflation, because unless core inflation converges towards 4%, RBI probably would not be very happy or inclined to cut interest rates. So the takeaway from all this and looking at the inflation forecast, if you see October, December is at 5.4, January, March next year is retained at 5.2. RBI is not going to cut anytime soon. And we know that the Fed is probably going to hike in July. And, probably the Fed will only cut in March of next year. So whoever was expecting, or if markets were expecting that October, December, RBI could move by cutting rates, we don't see any kind of reason why RBI should. And if you look at the growth forecast, actually 8% for April, June, when markets are at 7% and 6.5 for July, September, it's quite on the bullish side. And, consensus is for a 6% growth this year. RBI is for 6.5. But if RBI's forecasts are met, then, the logic for rate cuts get pushed back, and probably in April of next year is when you could expect RBI to start cutting rates, and we have a prolonged extended pause for now.
Okay.